Good morning, everybody, and thank you for joining us for FMT's presentation of NetSuite year-end close training. My name is Lucas Darling. I'm an account executive here at FMT Consultants, and I'm joined here by one of our very own senior NetSuite consultants, Carolyn Southern, and she'll be guiding you through the webinar today. For those of you who aren't familiar with FMT, I'd like to just take a few moments to give you a brief introduction of our company. Here at FMT, we opened up for business in 1995 out of Carlsbad, California, and have successfully completed over 1,000 ERP projects and have accumulated over 120 ERP clients. These clients span the United States and even into Canada. During this time, we've been able to establish ourselves as Southern California's leading provider of integrated solutions, and along with those 22 years of experience, our teams possess the functional and technical knowledge in all areas of ERP solutions. And with that seamless transition to our customer care team, we're really dedicated to the success of your company. We are a Microsoft Gold partner, as well as a preferred partner for both Dell and NetSuite. We have been partnered for Microsoft for over 20 years and consult on a wide range of Microsoft products. We have 6 gold competencies, as well as a tier 1 cloud service provider. And because of our expertise in this space, we were approached by both NetSuite and Dell to engage in a strategic partnerships, and we've continued that relationship and will continue to work with them side by side for years to come. The FMT way is really something you begin to understand once you engage and begin doing work with us. With that combination of talent, experience, and expertise and the methodology, we're fully dedicated to the success of your company. We offer a wide array of services pertaining to ERP, CRM, SharePoint, BI and analytics, and even the Office 365. In addition to our offerings, we have an entire department dedicated specifically to customer support with 13 full-time senior consultants that are there to serve you from 6 a.m. to 6 p.m. One of the things that FMT prides ourselves on is having extremely experienced consultants who are versed in all kinds of backgrounds, industries, methodologies, and systems. So, we really understand your struggles, and we want to help you to put you in a position to succeed. Now I'm going to hand it over to Carolyn, but before I do, I wanted to point out that our NetSuite year-end manual is available for download in the handout section, and we will be following up with all the attendees in the webinar today and providing that year-end manual. If at any point during the presentation you have a question, feel free to type them into the comment box. We will be monitoring it throughout the webinar, and we'll answer them at the end. Thank you. Carolyn?
Hi everyone, welcome to our webinar. As Lucas stated, my name is Carolyn Southern and I'm a senior consultant here with FMT on the NetSuite team. So today we're going to walk through some of the processes required to close out the year in NetSuite. And a lot of these are going to seem similar because many of them are the same processes that you follow during your standard month-end close. There are a few tasks that are unique to the end of the year, so we'll make sure to pay extra attention to those as we walk through the presentation. At the end of the presentation, we're going to do a demo in NetSuite, and then I'll actually be able to show you some of the tasks that we walk through in this slideshow. So our agenda here today, showing you what we're going to walk through here. So first of all, we're going to talk about the permissions required for period management. So that's going to be what you need to set up on your user roles in order to allow users to perform the various tasks we're going to talk about today. Next, we're going to walk through the best practices and NetSuite requirements for closing AR, closing AP, fixed assets, and then we're going to begin walking through the accounting period management and the period close checkbox. So we're going to talk about some of the options that come up, talking about lock all, resolving date and period mismatches, inventory closing, general ledger closing, accounting period closure, and then accounting period management. So let's get started. So first of all, I just want to draw your attention again to the document that you will receive as part of attending this webinar. We have a very detailed year-end closing guide that walks you through step-by-step all of the tasks you're going to need to complete in order to close out your year in NetSuite. So if something I say today doesn't quite stick or I go through it too quickly, feel free to use that handout as a reference and go ahead and walk through it step-by-step in your own environment, and you should be set. All right, so let's get started here. So first of all, let's talk about the permissions required for period management. So best practice, we're going to have accounting users in their own customized roles, and best practice will be to isolate the roles that have permission to manage accounting periods. So we definitely don't want to give everybody on the accounting team the ability to open and close periods. We want to establish at least a minimum level of controls and make sure that that access is limited to a few key users. So on a user role, and we'll walk through this in the demo, there's a couple permissions that you need to make sure are enabled in order for that user to be able to walk through the tasks in this presentation. First of all, the user will need to have permission to manage accounting periods. And this is what is going to allow them to open and close the periods. Next, we have a permission called Allow Non-GL Changes. Now, this permission is optional and definitely not required as part of the close, but it's important to know that it's available. So with the Allow Non-GL Changes permission, you're actually able to permit users to make changes in closed periods as long as they do not have a GL impact. So I'll give you two examples here. Example number one, we are in January 2018 and we've closed out December 2017. I want to go in and change the dollar amount on one of my invoices. Now, I will not be able to do this regardless of whether I've enabled this setting because I'm making a change that would have a GL impact. Now, in the second example, let's say I want to go in and add the customer's PO number to their invoice because they require that on their printed invoice. Since that has no GL impact, if I had enabled this setting, I would be able to go in, make that change on the invoice, reprint it for the customer, all while keeping my period closed. In the demo that we're going to walk through toward the end of this presentation, I will show you the setup on the user role required for these period management tasks. All right, next up, we're going to get into some of the meaty aspects of our presentation here. We've got our accounts receivable closing tasks. So number one here, it's going to be the same as if you were closing out a period. At the end of the year, you want to make sure that you've posted all the transactions for the closing period. Now, as you know, in NetSuite, we don't really have a concept of posting. So what that means is you're going to have entered all of the transactions you need to close out that particular month. So it's a little bit obvious to mention this, but we need to make sure that we have all of the important transactions entered, all of your invoices completed, all of your payments entered, all of your credits entered before you're ready to close the period or close the year. The next thing you're going to want to do is run your period reporting. And so that's going to, for accounts receivable, that would include reports like your AR aging, whether it's in summary or detail, your AR register, and any other reports that are part of your standard monthly close process. Next up, we're going to perform some customer record management. Now, these tasks are things that you can do throughout the year, but are especially important at the end of a year as it's time to turn over a new leaf and kind of review your year as a whole. So one of the things you want to do is go through and update your contact information on your customer records. Reach out, find out if addresses have changed. If somebody has an email address, they want to start receiving invoices via email versus through the mail. The other thing you want to do is look and see, which customers you've actually transacted with over the last year. So in NetSuite, you have the ability to make records inactive if they're no longer in use. So best practice would be if you haven't transacted with a customer over the last year and you don't anticipate them to come back up anytime soon, best practice would be to mark that record inactive. Now, when you mark a record inactive, the record remains in NetSuite, it just doesn't show up in most of your day-to-day searches. So for example, if you were to mark a customer record inactive and then go look at a list of your customers, you wouldn't see that customer unless you specifically chose to show inactive records. So if at any point in the future that customer comes back and places an order with you, you can always make them active again and move on from there. All right, next up is our accounts receivable aging management. So again, at each month-end close process, best practice would be to review your accounts receivable, make efforts to collect on accounts that are past due, and make efforts to evaluate whether or not those past due accounts are collectible. Especially important at the end of the year as you're wrapping up your financial statements is identifying those accounts that truly are bad debt and performing the transaction to write those off in NetSuite. So The recommended practice for writing off your bad debt in NetSuite is to enter a journal entry and make sure to tag the customer name in the line that's hitting AR, and then you go into AR and apply that journal entry against the open balance for the customer. That's going to take the balance off of your accounts receivable statement and accounts receivable reporting, and it's going to record that uncollectible balance as your bad debt. Last of all, we have the period close checklist step for accounts receivable. So under our manage accounting periods, where we have our period close checklist, we have a specific task called closing AR. So once you perform this task, once you go in there and mark that checkbox, nobody will be able to enter transactions in the accounts receivable module once you've marked that checkbox. As we'll walk through in the demo, you can always go back and reopen AR. But as soon as you can confirm that you've posted all the transactions for the period that you're closing, best practice would be to go ahead and close that period so that somebody doesn't accidentally go in and post something against it. All right, so next up, we're going to talk about our close tasks for accounts payable. Now you're going to notice it's all very similar to our tasks for accounts receivable. So first up, we want to make sure that we're posting all of our transactions for the period. This can be especially challenging if your vendors don't always send you their bills in a timely fashion. So one of the things you may need to do is enter any accruals for vendor bills that you've received against, but you haven't entered the bill in the system. The other thing you want to do, make sure you have all of your vendor credits in, all of your vendor bills, all of your vendor bill payments. Again, similar to AR, you can't close the task until you've posted everything for that particular module. Next up, we have our period reporting. So this is, again, going to be very similar to what we talked about for AR. We have our accounts payable aging, both summary and detail, and our AP register. For the vendor management, best practice, like with customers, is to go through and take a look at your records and make any updates where they're needed. So again, if you have vendor records that are missing address information or contact information, best practice is at year end to go through and try to fill that information in, make sure that everything you have is current. And if there's vendors that you no longer transact with, go ahead and mark them inactive. Just keep your vendor list cleaner, clean up the system, make it more easy for users to navigate. Again, you can always go back and make a vendor active if you decide that you want to purchase from them again. So the next step on here, our 1099 reporting, is unique to the year-end close process. And it's one of those things that comes up every year, and it's like just when you figured it out, another year passes and you need a refresher on it again. So we're definitely going to walk through that in our demo portion. So a couple important points on the 1099 reporting. First of all, there's a couple prerequisites in terms of system configuration that you'll need to perform before you can run your 1099s in NetSuite. So if you go in there today and you don't have any of the setup done and you go to try to print 1099s, you're going to come up with nothing. So very important that we have these prerequisites configured. So first of all, we need to mark our vendors as 1099 eligible. And we'll walk through this on the demo, but there's a checkbox under the financial tab on your vendor records that will flag the vendor as 1099 eligible. The next thing you want to do is make sure that you have all of the tax IDs for your vendors. Now, best practice when you're adding a new vendor in NetSuite would be to obtain their tax ID at that point. You don't want to get to a point at the end of the year where you know that you have a bunch of 1099s to send out, but you don't have any of the vendor's tax IDs. So best practice would be to do it at the time of vendor entry, but you are able to go back later and enter it if you didn't have the information initially. So first configuration step is on the vendor records themselves. The next configuration step is on your chart of accounts. So on your chart of accounts, if you go to edit an account or create a new account, there's a drop-down list that refers to a 1099 category. And what this is you're associating a specific 1099 category with that particular GL account. And that's going to be NetSuite's flag so that if an expense or an item is posted against that account and then a vendor bill payment is issued for that expense or item, NetSuite knows that that should be eligible for 1099 and that it will show it in the correct box when printing 1099 reports. So one example of that would be if you had a outside services GL account, which would be to record payments made to independent contractors working with your company. For example, that would be one that you'd want to associate with the Box 7 miscellaneous income. Or another example, you could have a rent account or a legal fees account. And again, those would each be associated to their unique 1099 categories. So the good news is if you haven't yet set this up in NetSuite, you can go back and set it up after the fact. So even if you've been paying vendors all year and you don't have this set up in your chart of accounts, you can still go in and set that on the accounts now and it will work correctly. The other thing that you can do in NetSuite regarding your 1099 categories is you can establish the threshold at which the payments should become subject to reporting. So for this last tax year, anything that fits one of the 1099 categories that is in excess of $600 needs to be reported on 1099. Now that limit can change over the years and it certainly has changed in the past. So you have the ability to go into NetSuite and configure that in your accounting lists should that change in the future. Finally, under our period close checklist, same with accounts receivable, in our manage accounting periods, our period close checklist, we have a closed task specifically for accounts payable. So once you mark that closed, users will no longer be able to enter transactions in the accounts payable module. Now, it's important to note, so far we've kind of discussed NetSuite as though we're using a single entity or a single subsidiary, but within a one world environment, the accounts receivable and accounts payable close processes can be performed separately per subsidiary. So if you have several international subsidiaries, let's say, and they all have a different closing timeline and one of them closes before the other, you don't need to wait on the entity that's lagging to go ahead and close the one that's finished on time. All right, so up next, we're going to talk about our fixed asset close tasks. Now, there is no specific period close checklist around this specific module. So what we're going to talk about today here are just our best practices and FMT's recommendations for what you should do around year end for your fixed assets. So first of all, we have some customers or some webinar attendees who are going to be using the fixed assets module in NetSuite, the FAM module. Others may not have this enabled and may just be managing their fixed assets through their balance sheet or an external system. So like with the other processes we discussed, the first thing we want to do is make sure we've posted all the transactions for the closing period. Now it sounds obvious, but I can't tell you how many times we've had people come back and need to add transactions to a period they've already closed. So it's worth taking that extra step to make sure that you have all the information you need entered before you proceed. So for a year-end close process, that means you're going to want to have run your depreciation through the end of the year. So in a calendar year system, we want to make sure that we've run our depreciation and posted the journal entries or approved the journal entries through December 2017. If we're doing that through the fixed asset module, that's going to be through the transactions and running depreciation. If it's going to be without the fixed assets module, you're going to be just entering those journal entries directly into the general ledger. And then the next thing you want to do, once you've made sure that you've run all of your depreciation and any write-downs or disposals that you need to do, you want to run some reports. And you want to make sure that your balance sheet accounts are tying to your fixed asset reporting. So remember, in NetSuite, if you're using the FAM module, the values that you see in the FAM reporting are not connected necessarily to the values that you see in the GL. So very important at the end of the year that your total asset value, your total accumulated depreciation, your total depreciation expense, that ties between the fixed asset reporting and between your balance sheet. Now, let's say somebody manually enters a journal entry to your depreciation account and they didn't run it through the FAM module. You'd be able to identify it at this stage and correct it and run it properly through the fixed assets module. Now, if you aren't using the FAM bundle or the FAM module and you're running an external system, same thing. You want to make sure that whatever you're using as your subledger to manage your fixed assets is tied out to the NetSuite general ledger. The other area around fixed assets to consider is whether you're maintaining alternate depreciation methods for example, for tax basis depreciation. So in NetSuite, you can manage or maintain more than one. In fact, you can maintain several depreciation methods per asset, and you have the choice whether or not to make them GL posting. So for example, you could set up an alternate depreciation method for US tax basis depreciation that would be reporting only. So if you have plans to do that, recommendation would be to run those reports, make sure that your alternate depreciation methods are configured correctly, and that you can make any adjustments needed so that your primary and your alternate and any other depreciation methods you've set up are all reporting correctly as of the end of the year. All right, next up, we're going to start walking through some of the actual tasks in the period close checklist. So we talked about, we walked through the first steps in there. We've got our lock AP and our lock AR. So next up, we've got our lock all close task. So the lock all kind of covers the areas of the system that don't quite fall into the accounts payable and the accounts receivable modules. So easiest example would be once you've marked that lock all functionality for a period, somebody would not be able to go in and enter a journal entry to that period. So it doesn't really anything that falls outside the realm of strictly AP and AR would be impacted by this lock all. Same thing if you wanted to, let's say, process an item fulfillment. Again, that would be prevented by this lock all close task. As we talked about with the other close tasks, if you're running in a one world environment, you can mark this lock all close task separately for all of your different entities. So best practice recommendation would be as soon as you hear that the transactions have been finalized for the period for an entity, go ahead and go in and mark this just to make sure that transactions aren't accidentally posted to the period. One thing that happens frequently at the end of a year is people forget that they're all of a sudden typing in 2018 instead of 2017, and you can actually just have a lot of mistakes happen because people aren't used to keying in the correct date. Next up on our period close checklist, we have the tasks to resolve date and period mismatches. So the purpose of this is to ensure that the transaction date and posting periods of the transactions are in agreement for reporting. So in NetSuite, you're not going to be prevented from posting a transaction if your transaction date and your posting period don't agree, unless you've enabled a specific accounting preference. We will walk through this in the demo, but you have various levels of security around this. You can permit it with a warning, or you can prohibit it entirely. Now, one use case where you might find yourself entering a transaction where the date and the period don't match is, let's say you have a very short close timeline, and you like to close your AP as of the last day of the month. Now, let's say that's on a Friday, and then on a Monday, you receive in a vendor bill, and it's dated for that last day of the month. You may want to enter your vendor bill with the true transaction date so that you can record it properly for aging purposes. However, you've already closed your period, so you would need to post it in the following period. In other cases, sometimes it's simply a mistake when somebody enters a date and the period doesn't match. So the whole purpose of this step in the close checklist is not to prevent you from having these transactions, but it's to force you to take a look at each one and make sure that they are intentionally different between the transaction date and the period. Next up, we're going to discuss the inventory close task. So first of all, we're going to talk about, again, common concept here. We want to make sure we've posted all the transactions for the closing period. So make sure we've received in all of the receipts we need to do on any open POs, fulfilled any sales orders, made any inventory adjustments, performed any physical inventory counts. That's definitely a big task that happens at the end of the year. So anything that you want to happen as of your last year, you want to make sure that you've performed those tasks and posted them as of the last fiscal year before you go ahead and move on to this task. Again, just as we talked about before, we have a concept between our difference between our transaction period and our transaction date. So again, if you find yourself in a place where you need to post something to a prior period, You are free to do that as long as your period is not closed yet. So a big part of year end is going to be our inventory reconciliation. So for a lot of companies, that might mean doing a physical count, entering adjustments. Others might be doing a full count, shutting down the warehouse, counting the entire warehouse. Other people might be doing some cycle counts here. So typically we have a lot of activity around inventory adjustments and inventory counts. One thing that will come up is a review of negative inventory. So in NetSuite, it is possible to enter transactions in a way that you would end up with negative inventory. Depending on your inventory commitment settings, it could happen through a fulfillment where you fulfill more than you have on hand. It could happen through an inventory adjustment. It could happen through an assembly build. There are more ways to create negative inventory than I have time to go through. So what's important is that you're aware of the negative inventory and the implications that it'll have on your system. So first of all, obviously, if you have negative inventory, that's just completely inaccurate and it makes it difficult for the warehouse to know what they have on their shelves. And second of all, that's going to impact your costing. So this inventory close task, one of the purposes of it is to draw your attention to any negative inventory that you have on hand. As we talked about in the last step with the date and period mismatches, NetSuite is not going to prevent you from moving forward in your close if you do have negative inventory. However, it will show you a list of all of those items and basically ask you to acknowledge that you're aware that there is negative inventory. Now, if you get to this state in your close and you decide that you want to fix these negative inventory items, you can go ahead, pause where you're at with the period or year-end close process, jump into your transactions in NetSuite, fix that negative inventory, and then come back and pick up where you left off. So very important to know, if you reach a stage in your period close checklist where you determine you need to make some adjustments or come back out, you can always leave that at any point and pick it back up at a later stage. Next up, we want to review our inventory cost accounting. So in NetSuite, we have a costing engine that runs after you perform transactions that impact inventory. For example, an inventory adjustment, an item fulfillment, an item receipt, physical inventory count, standard cost revaluation. All of these transactions will have an impact on your inventory costing. Now, depending on your environment, the costing engine will run at various periods. Some people might be in an environment where it's configured to run on a nightly basis. Some people might be in an environment where it is configured to run in real time, which typically works out to being 15 minutes after transaction entry. One of the new features in 2017.2 is users are actually able to schedule their desired inventory costing timeline as part of their system setup. So depending on how you have it set up, you could potentially find yourself in a place where you're running your period close and the inventory cost accounting process has not yet completed. So I'll give you an example. Let's say that you found that you did have some negative inventory in December. You go back in and you fix it. However, your costing engine is set to run on a daily basis. If you went back into your inventory close task, it's possible that you would have to wait until the following day for that inventory costing to complete on those negative inventory items before the costing engine would have completed running. So my recommendation is, be aware of what the setting is for your particular account. Definitely, a lot of times you're not going to be in a position where you are making a change in a period and then right away going to go ahead and close that period. But definitely you want to make sure that if your costing engine is running, you hold off on running any financials just because that will have the impact, that will have the ability to impact the numbers that you see there. Moving on to our period reporting. So some of the reports that you're going to want to look at for your inventory as far as year end would be your inventory valuation. So show you what you have on hand, show you all the items you have on hand, the quantities that you have on hand, and the percentage of those items that make up the total inventory value. So you can see, for example, if one item makes up 35% of your total inventory value, that could be a trigger either to, stop ordering that item or get out there and actually count that item and make sure that that's accurate. The next thing you want to do, you can run your physical inventory worksheet. That would be a part of if you decided to do a physical count. You can run those reports, go ahead and pass them out to the people in the warehouse. They can use them to record their physical counts, and you can use that to enter your inventory count information into NetSuite. And then finally, you're going to want to run your trial balance or your balance sheet. And that's just to make sure that what you're showing as far as your inventory value on the GL matches to the total quantity you have on hand times the total cost you have on hand. So once you've gone through those tasks, you can go ahead and mark that step complete on the inventory close task on the period close checklist. All right, next up, we're going to walk through some tasks for general ledger related closing. So some of these tasks are going to be specific to the features that you have enabled in your account and the type of account that you have and the type of transactions that you do. So first up, we have the task to revalue open currency balances. So what this does is it looks at any foreign currency balances that are open as of the end of the period, and it adjusts them based on the currency exchange rate set for that particular account. So for example, let's say you're in the United States and you sell to a customer in the UK, and you sell to them in British pounds. If that customer has an open balance with you as of 12/31, so they owe you money, when you run this process to revalue the open foreign currency balances, it's going to run through and take the amount that they owe you in Great British pounds and adjust that for the exchange rate as of 12/31. So let's say that you invoice them for 10,000 pounds in July. That's going to have a different value when you get to December 31st. So step one, or part of that, would be generating your entries for unrealized gain and loss. So unrealized gain and loss would post for any open transactions that you have, as the invoice example we just discussed, and it'll automatically reverse as of the following month. So this is one of those tasks that is, if you use multiple currencies in your environment, you should be running this on a monthly basis. And so as part of your year-end close process, it would just be to repeat the same process that you do each month. The other types of foreign currency revaluation transactions that you can generate are realized gain and loss. So that would be, for example, if that $10,000 invoice were paid, it would be the difference between the amount paid and the actual value in your US dollars. And then you have your matching gain and loss adjustments, which would be if there's a balance remaining, a foreign currency balance remaining in an account, but your base currency balance is zero. NetSuite would automatically create an adjustment to ensure that the account balance was zero, both in base and foreign currencies. So you can revalue open foreign currency either through the period closing task, or as part of, you can actually run it through the transactions financial revalue open currency balances. Next up, we have calculate consolidated exchange rates. So this particular task will come into play if you're operating in a one world environment. So if you have multiple entities using multiple currencies, in order to create accurate consolidated reporting, you need to establish exchange rates for translating the various transactions for your consolidated reports. So this particular step in the period close checklist ensures that you have reviewed those consolidated exchange rates and that you are aware of what they are. Now, you do have the ability to edit them should they be incorrect. And in this step, you will be asked to review all of the exchange rates and go ahead and acknowledge that you have reviewed those exchange rates. Now, typically, the consolidated exchange rates will be pulled from the configuration that you have on the account record. So on the account record, you can set the exchange rate to be used for that particular account. So whether that's a current rate, a historical rate, or an average rate, that's going to be pulled in for use in your consolidated exchange rates. Next up, we have another task that's going to be required in a one world environment, and that is your eliminate intercompany transactions. So the example that I'll give for this one is when you have companies, or let's say you have a one world environment and you have an entity in China that sells product to the entity in the United States. When you're running the reporting at the consolidated level, you're going to need to eliminate the transactions between these two companies, the sales and the purchases, for your consolidated financial reporting purposes. So through running through the eliminate intercompany transactions task, you're going to generate those eliminations necessary to provide correct consolidated reporting. Finally, we have our GL audit numbering task. This task is optional based on whether or not you've elected to use this feature in NetSuite. You can decide whether or not to use GL audit numbering, and you can also determine the frequency in which you want to use it. What it does is it applies a gapless numbering sequence to all GL posting transactions. What this allows you to do is, regardless of changes made in the system, you're able to see the order in which the documents or transactions were created, and it provides you with a very strong audit trail if you need to go back and try to figure out what might have happened with transactions or accounts if a balance changed. You are able to choose the numbering and the frequency of your numbering. And once you run that, it'll apply those to your open transactions. I'm just going to walk through some of the slides here that we talked about. So we've got our revalue open foreign currency balances. Again, this will come into play if you're in a multi-currency environment. We've got our consolidated exchange rate calculation. So this will be to ensure that when there's differences between functional and base currencies for child and parent subsidiaries, that your consolidated reporting is calculated correctly. We have the eliminate intercompany transactions task, and that's going to create the elimination journal entries in the elimination subsidiary so that your consolidated financial reporting is correct. And finally, we have our GL audit numbering, where you can apply a gapless numbering sequence to all transactions with a GL impact, and you can choose whether to do that per period, quarterly, or annually. Okay, so next up, we're going to talk about our accounting period closure. So in general, we've been walking through the tasks that fall into the period close checklist. And best practice would be to limit the roles that have the ability to do this. The ability to close a period is very important. It's your way of ensuring that financials and transactions don't change in the past. So best practice would be to provide one or two roles that have the ability to do this, and to limit those to senior users in your accounting department. In the Manage Accounting Periods view in NetSuite, you have the ability to see the status of your accounting periods, whether or not they are open or closed. And when you drill into them, you're able to see the specific status for each period close task. You can always go back and reopen a closed period as long as you have permission. And you're able to go back and open a closed period that's, let's say, 6 months back. You're able to do that without having to open each single period between now and then. Finally, we're going to talk about the accounting period management. So likely you will already have encountered this, the need to set up a new period, new quarter, and new fiscal year for 2018. So once a year at least, you're going to want to go in here and make sure that you have sufficient future periods and years open, so that when you hit that new period, or if you have an accounting period window open, that you have the period available for users to select. At this point in the webinar, I'm going to move into our demo. I have just logged into my NetSuite account, and as you can see, I'm using a controller role. So best practice would be, even if you have the administrator role assigned, it's always best practice to actually use a configured non-administrator role for these tasks to make sure that you don't actually do something that only an administrator should be able to do. So first up, I want to walk through the permissions that we have configured on our controller role and make sure that everybody understands what you'll need to have set up in order to allow your user to perform these period or year-end close tasks. Now, NetSuite comes pre-configured with a number of roles. In this particular role that we're using has been customized. However, the permissions that you see here and the configuration is fairly standard for a typical controller type role. So as far as the permissions that you need for the year-end close or period close, we're going to come under Setup, and there's a couple of important permissions here. So first of all, we talked about that allow non-GL changes right at the beginning of the webinar here. So if we give the user permission to do this, if we've allowed non-GL changes in the period, the user will be able to go back and do something like make that edit on the invoice to change the customer PO number. So it's important to note that even if you've enabled the ability to make non-GL changes in a period, you still have to give a user specific permission to be able to do that before anybody would be able to go in and make that edit. Next up, we have the permission to manage accounting periods. So this is what's going to allow the user to come in, create a new period, create a new quarter, create a new year, as well as to walk through that period close checklist. Finally, we have another permission here. It's not necessarily relevant to closing the year or closing the period, but it is important to know in terms of closing periods that you can give a role the ability to override period restrictions. So this particular role does. And what that means is that this user is able to modify the period on transactions regardless of what it is set to default to. So these are some of the permissions that you're going to want to make sure you have set on the user that's going to be performing your period or year-end close tasks. Next up, we're going to review some of the accounting preferences that pertain to closing periods and to period management. So that's going to be under Setup, Accounting, Accounting Preferences. So right here under the General tab of the Accounting Preferences, we have several settings that are very important and that will dictate how the period behaves in NetSuite. So first of all, we have a setting called Enable Accounting Period Window. And what that does is it allows you to specify a number of periods that you always want to have open at any given point in time. In this particular account, you can see that my minimum period window size is 2. So what that means is that if I have one period open, or let's say I have December open and January open. If I go ahead and close December, that means that February is going to open in order to enable my minimum period window size. Now, the reason that this can be a good thing to enable is that it means that as soon as it's the first of the month, you don't need to worry about getting in there and opening up a period, as well as if people need to post transactions in the future, you can restrict that so that they're not, posting things 2 years out in the future, but that if there is a use case where they would need to create a transaction in the future, that they're able to select that. The next setting we also discussed earlier in the webinar, allow transaction date outside of posting periods. So as you can see here, we have those 3 options that I discussed. So if you have disallow set, it means that if a user tries to enter a vendor bill with a transaction date of 12/31, with a posting period in January 2018, they will not be permitted to save the record. Now, option number 2, warn. If a user enters a transaction like this, they will receive a pop-up message that's basically telling them that they're about to post a transaction with a mismatched period, and the user is allowed to click OK and move through that error message and save the transaction. Finally, if you have allow set up, same process, that the user is able to set up or create a transaction where the posting period does not match the transaction date, and they don't receive a warning before saving that transaction. So depending on the sophistication of your users, the size of your company, etc., different settings may be appropriate for this particular field. Next up, we talk about the default posting period when there's a transaction date and a closed period. So we have two options here. We could do the current period or the first open period. Typically, best practice, what I've seen is people setting that to the current period, but you do have the option to choose the first open period. That second option might come into play if you don't have a very tight period close schedule where you could potentially have the current period open as well as a prior period. However, frequently, usually the current period would be the most recent period open. Another preference that we have here is to allow quick close of the accounting periods. Now this preference can be very helpful and powerful, but it can also be very dangerous. It basically allows you to skip through the closing tasks and to just mass close periods. So I would never recommend using this functionality to close a period that you have not yet walked through the period close checklist in. But let's say you're in December 2017, you need to go back to June and make a correction based on information that your auditor provided. So you're going to have to go back and open June 2017, which is going to have the side effect of opening everything from July through November as well. So let's say you go into June, you make that modification. If you know that what you didn't have an impact down the road, it could be appropriate to use the quick close functionality so that you don't have to walk through each individual period close checklist for July through November. So it's good to have the ability to do that, but it's also good to know that that it can allow you to skip tasks that would otherwise be important as part of a month-end or a year-end close. All right, so next up, I want to talk about 1099 processing, as this is really one of those tasks that is absolutely key at the end of the year. So we talked about earlier that we have a couple of system configuration and preferences that we need to make sure we have set up before we're able to process 1099s. So the first thing that I'll do is I'll show you the configuration that we need to have on the vendor record in order for a vendor to receive a 1099. So I'm going to pull up my vendor here, and we'll take a look at the configuration that I have on this vendor record. So looking at a fairly standard vendor form, I'm going to come to the financial tab here, and you can see that I have this checkbox 1099 eligible. So this really is step one in terms of processing your 1099s. You need to identify your vendors that should be receiving 1099s. The next important thing on here is the tax ID. You need to have your tax ID print on the 1099. As we discussed, best practice would be to enter this and obtain it at the time that you're entering a new vendor. But of course, you can always go in at the end of the year and enter that after the fact. Next up, we have our configuration on the account records themselves. So I'm going to go ahead and pull up my chart of accounts. And I'm going to scroll down and I'm going to find an expense account. So like we talked about, we have an outside services account here. So, a lot of times you might see that on the chart of accounts to record payments made to independent contractors. So if I come in and I open the account record in edit mode, you can see here that I have a 1099 miscellaneous category. So if I click this drop down, you can see here that I have a number of options to choose from here. In this particular case, we're talking about, an independent contractor, so that would relate to box 7, non-employee compensation. So it's important to note here, you can only select one per account. So best practice would be if you happen to have a GL account where you might be posting multiple types of payments that could be subject to 1099, you'd want to set up a separate account so that it could be reported correctly. Finally, we talked about how you can set thresholds or limits for the 1099 category, and that's going to be under your setup, accounting, and accounting lists. So if I come to my filters here, I can see that I have my 1099 miscellaneous categories, and it'll show me all of my categories. Now, if we come in and take a look at, let's say, box 7, we're talking about non-employee compensation, you can see that my threshold here is set to 600. So should that change in the future, I have the ability to come in and edit it if I need to do so. Now next up, let's say we have all of our NetSuite configuration correct. We've got our vendor set up. We've got our chart of accounts set up. The next question is, well, how do I print these things? So you're going to go to Reports, and you're going to come down to your Sales Tax US section, and you'll actually see a Form 1099 Miscellaneous. So let's go ahead and click that and see what we get. So first of all, you'll notice that you're asked to put in a year. Now the purpose for that is that NetSuite is going to pull the data on the basis of the year in which payments were made. So coming back to 1099 basics here, the dollars that are subject to 1099 payment are not on the basis of the invoices that you've received, but they are on the basis of the payments that you've made. So any payments that are in 2017 will show up here for printing. Next up, we have our offsets here. So as you know, you're going to be printing your 1099s on pre-printed stock, and sometimes the way that your printer is set up isn't necessarily going to align with how the PDF will be generated by NetSuite. And so that's really just going to come down to your individual printer. So what you can do here is you can set a horizontal offset and a vertical offset. Now, my recommendation would be 1099 forms. They can be expensive. You don't want to run through a bunch, testing out your alignment. So I would recommend printing out a blank sheet first and just holding it up against the light against your 1099 form to make sure that everything aligns before you go ahead and load your paper in the printer. The other thing that I would be careful of in this is make sure you know which side of the paper your printer is going to print on. Always good to run a little test and make sure before you end up printing on the wrong side of 100 forms. So you'll see here we've got two examples. We've got our bookkeeping services client, and then we've got Clinique down here. So you can see that I have a section 1099 miscellaneous payments. So these will be all of my payments for that vendor that are subject to 1099 reporting. Then you can see over here we've got excluded payments. So in this particular case, for this bookkeeping services client, there was $50 that we paid them that was not entered to an account that was set up for 1099s. So that is going to be excluded from the report, yet we can still see it here. Finally, we can take a look and go ahead and preview our 1099 and take a look at what that's going to look like. So before we go ahead and print all of them out, we have the ability to make sure that it looks right. The other thing to note on this is if I needed to, for whatever reason, make an adjustment or a correction, you can see that these fields are editable. So for whatever reason, there was a payment made that wasn't recorded in NetSuite, which if you've migrated to NetSuite over the last year could come into play. You have the ability to adjust that here. So in the final part of my demo, I want to walk through the manage accounting periods functionality and talk about some of the accounting period close tasks that we talked about in the slide deck. So we're going to come over to Setup, Accounting, and Manage Accounting Periods. Now again, you'll notice I'm using my controller role. And so this role is configured to allow me the permission to do this. If I were in a different role, my role would not even have access to see this page. So first of all, you can see here that I have all of my fiscal years, and it looks like I've created fiscal years out to 2018. So important to note, if you are running processes like revenue recognition, where you might have a need for a fiscal calendar way out in the future, you might need to at some point go in and add a few more years if you've reached the end. So for this particular account, recommendation would be to go in and add fiscal year 2019, just to make sure that users don't run into any errors should they need those future periods. So if we open up my fiscal year 2017, a couple of important things to look at right here. So first of all, we can see on this period close column, these green check boxes, we can see just by looking here that I've closed all of my periods through November 2017. The other thing that we can see is that for AP transactions, AR transactions, and all GL transactions, we also have those closed. So that stands to reason if we've closed the period, we also have those closed. However, you could have a use case where you've closed AP and AR, but you still have your GL open and your period isn't closed, and that would reflect differently in this list. The other thing that we can see here is in this particular environment, I'm not permitting non-GL changes, so we don't have anything marked in that checkbox. So if I want to drill into my period close checklist for December, I'm going to go ahead and click this magnifying glass here, and it will take me to my period close checkbox. So right here, we can see that the status of my period is open. First of all, first task on here, we're going to go ahead and lock AR. So let's go ahead and click on the little green arrow. And because I'm not in a one world environment, I just have this option here at the top to lock. If we were in a one world environment, you would see a checkbox to lock each individual subsidiary. So for this one, it's a little bit more simple. We just have the one lock button. The other important thing here is the system notes. So you can see here us playing around before we had our presentation today, and I opened and closed this period a couple times. So this can be very helpful if you close your period and somebody else on your team has the ability to manage accounting periods, and all of a sudden the period's open. You can come back here and see a full audit trail of all of the changes that were made. Let's go ahead and click lock. Now, if I were to come back to my period close checklist, showing all of my periods, you'll see here now that my AR has a little orange lock, whereas my GL and my AP are still open. So let's go ahead and go back into our checklist. And you can see here now that our status is showing we have a green arrow here. So we've locked AR and everything else is still waiting to be done. So same process for AP. We're going to come in here and mark lock. And that's going to lock our AP. So at this point, if I try to come in here and enter transactions, enter an invoice to a customer, or enter a vendor bill in December 2017, I would not be able to do that because I've locked these two processes. Now, I would be able to enter an item fulfillment or enter a journal entry because I haven't yet clicked the lock all button. So next step would be to click our lock all button. So what this does is it essentially locks the period to all user transactions for that particular period. Now you'll notice that you have to go through these tasks in order. If I wanted to review my negative inventory, I couldn't do it yet because I haven't done the transaction before it. So for AR and AP, you have the ability to do those in the order that you want. But for some of the tasks later down on the checklist, you have to follow a specific order. So next up, we can take a look at our date and period mismatches. So this is where the system is going to show you a list of all of your transactions where the transaction date does not match the posting period. So you'll actually see that I have the ability to mark the task complete here without doing anything. So as I mentioned before, NetSuite's not going to force you to change any transactions, but the purpose of this step is to make sure that you're aware of any mismatches. So you can see here that I have one invoice where my transaction date was in November, but I posted it in December. So you can see here it gives me a link to edit the invoice. So if I determined that that was a mistake, I'd very easily be able to go in and edit that. But you'll also see that I can go back to my period close and mark the task complete without having to edit the invoice. Next up, we have our review negative inventory task. Again, we'll click our review negative inventory. And you can see here we have two items with negative quantities on hand. I could go in and adjust those, or again, I can go back to my period close and mark the task complete. Up next, we have our inventory cost accounting. And again, we have the option to review our inventory cost accounting. So I'm going to go ahead and click that. And you can see that I actually have one item remaining for cost calculations. So I have the ability to run my inventory costing now, or I can go ahead and go back to our period close. So for the purposes of this demo, I'm just going to go ahead and go back and mark our task complete. And finally, we have the ability to review our open foreign currency balances. So if you have not already run your currency revaluation as part of your regular processes, you could go ahead and run that now. As you can see, I've already run my currency revaluation. I have an amount here, so I can go ahead and mark this task complete as well. So that wraps up our demo of the period closing checklist in NetSuite, and I'm going to hand it back over to Lucas now.
Thanks, Carolyn. And we do have one question here from Natasha. Do you have to enable allow non-GL transactions on accounting preferences level?
Hi, Natasha. So you actually enable that on the accounting period. So when you go into your accounting period, And we can go ahead and take a look at that right now. You actually have a checkbox there that you can mark to allow your non-GL changes. What you have to do then, if you're not transacting as an administrator, is you need to go in and assign the permission to that particular user to make non-GL changes. I hope that resolves your question.
Yep, thank you, Carolyn. And thank you, everybody, for joining us today. Carolyn, that was a wonderful webinar. If you guys have any other further questions, we will be following up with all the attendees here today. Feel free to ask at that time. We truly appreciate you taking the time out of your day to join us, and we hope to see you at all future events. Have a great day.